All right, so we had a crazy week in the markets. Everything was up quite significantly. S&P was up about 6 or 7%. The NASDAQ was up even more than that. The Meg 7 was up even more than that. Small caps and mid caps as well as value did trail the markets. So that's something, but that's something that's not completely unexpected, especially when you have such a significant rally. I wanted to get into that. I wanted to get into this post from basically talking about Ray Dalio, which is something a little different than I normally talk about, but I thought it's interesting, so I wanted to talk about it. First things first, if you get value out of the video, please like, subscribe, comment. Check out those links below. Very much appreciate the support. So let's get into the markets first. Like I said, we had a nice relief rally this week, and the big question on people's minds, obviously, is are we going to continue this rally, or will we head back down and test the lows? I really have no idea. I really have no idea. It is borderline impossible to predict this stuff because a Trump tweet can move the markets 5, 6, 7, 8, 9, 10% in a matter of a day or two. So nobody knows what's going to happen here. But the one thing that I've said, and I still maintain this, is it will be a major blunder by the Trump administration to continue this rhetoric long term. And I'm talking anything more than the next 6 months or so. Because if this kind of volatility continues, it drastically increases the chances that they lose the House, the Senate, and the presidency in 2028. And if that happens, number one, they probably impeach Trump again, and that insanity starts all over again, like happened last time. Number two, he isn't able to get nearly as much done, and number three, they don't get this stuff implemented long term. So what's the point of implementing these tariffs if they're only going to go into place for 2 or 3 years, and you're going to get nothing else done? Like, and when you look at tariffs, like I've said time and time again, and again, basic economics suggests that tariffs in and of themselves are not going to make the economy better. They can help in certain ways, but as an aggregate, if after you net everything out, it's not going to help. Because yes, it'll help certain industries, but at the end of the day, it's going to make stuff more expensive. And it's going to hurt more people than it'll help. It'll help certain special interest groups, but it's not going to help the average person. So that's something that needs to be understood. But when you look at tariffs, if you combine it with tax cuts, with deregulation, I think absolutely it could help. So this is something that they absolutely need to do as well, because if they just do tariffs and they don't cut taxes, they don't cut regulations, it is not going to help. I mean, like I said, it'll help a little bit, but at the end of the day, it's going to make things worse. So that's something that really needs to be understood. And that's something that makes me optimistic going forward. In the very near future, in the next 3, 4, 5, 6 months, honestly, I still lean on the pessimistic side. I think the volatility in the near term is here to stay. But until they have the majority of these countries have new trade deals in place, once these tit for tat things have stopped happening with China and places like that, that's when we know that we're finally out of the blue. And the other big concern is a recession. But on the flip side, I think the market has already priced in at least a decent chance of a recession. So the recession is it's gonna have to be a worse than expected recession for that to cause a major pullback. So that's something to keep in mind as well. But I do think it's probably more likely than not that we're going to see a recession. The big question is, if let's say in the summer, all of this tariff stuff is beyond us or is past us, they have deals in place, that's not a big concern, the Fed's cutting rates, they're doing QE, then I think the market probably has bottomed. Like, if I was making a prediction from here, that's probably roughly when it happens. Probably in the summer, in the fall. That's probably when they have new trade deals in place. We're probably past the tariff concerns. The Fed's probably cut once or twice. They're probably doing QE, and that we've probably already seen the bottom in the markets. So I do think we're gonna end the year on an uptrend. The question is, will we have seen new highs by then? I think not. I think not. I think that the S&P probably closes the year between, I don't know, 5,500 and 6,000 if I was guessing. So that would be a modest pullback from the top, but that's just me. But frankly, nobody knows. Like, nobody knows what's going to happen because anything could happen. Like, the one thing I would say is that at least in the near term, I don't think Trump is going to back down from a fight. So we certainly, the volatility that we've seen recently, it's definitely here to stay, at least in the short term. So let's talk about this post about Ray Dalio. It's kind of interesting, so I wanted to get into it. This man understands the markets. He predicted Japan's crash, the 2008 recession, the U.S.-China power shift. I think he's kind of wrong about that. I don't think that China is going to... They're definitely going to grow, but are they going to be the largest economy in the world? It's tough to say. But, I mean, you look at China, they have terrible demographics. Their government does a very mediocre job running the economy. So those are things that get me to think, I don't know if China is going to be this major... I mean, they're not going to be that much powerful than they already are, at least in my opinion. Obviously, I could be wrong about that, but that's just my opinion. We're at the end of a long-term debt cycle. He says the U.S. is entering a danger zone. Debt to GDP is at 122%. Government interest payments are hitting record highs. This isn't sustainable. He's certainly right about that last point. I think that this is going to go on longer than people expect. I mean, there's people saying this. I mean, I don't remember, but reading about it, like, there's tons of people that were saying this post-2008. Like, there's no way we're going to be able to maintain this. We're going to see hyperinflation, blah, 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 blah. And here we are almost 20 years later, and we're still going strong. Now, obviously, there's a lot more problems out there, but we don't have any major concerns. We do have concerns, but we don't have major concerns. And the reason that I say this is there's really two ways we can go about it, because when you look at reality suggests that the only way we're getting out of this is if the government significantly cuts spending. And the only way that's going to happen is cutting entitlements. Like, when you look at America, I believe it's around 75% is some form of entitlement spending. So what does that mean? At some point, there is a guarantee that Social Security, Medicare, Medicaid, these kind of programs, they're getting cut. Like, it's not a matter of if, it's a matter of when. And the big pushback is always, well, people paid into it, you got to help the poor people. And as much as I understand that, reality is going to be tough, because there's no way around it. At one way or the other, that stuff is getting cut one day. So the real question is, when are we going to do it? Are we going to wait until there's going to be, I don't know, the next Great Depression, or are we going to do it now? And the answer to that is quite clear. People are going to kick the can down the road, because this is something that's not even popular on either end of the spectrum. So we're going to wait until we can't wait any longer. And I think that it's going to be longer than people expect. Like, it's really going to be longer than people expect, because if there's one thing that the government's good at, it's putting a Band-Aid on these kind of things. It's papering over problems. So he's right in that it's not sustainable, but I think he's wrong in that I think this stuff can go on for a lot longer than people think. So that's the point I would bring up there. The big three forces are colliding. Dalio says every major market shift is driven by three things: debt and monetary policy, internal conflict, external conflict. We're in a type of civil war, he said. Trust in government is near record lows. 2024 election lawsuits in 30 states. Rising violence tied to political identity. Now, this comes back to, again, for lack of a better way of putting it, too many people don't have a clue what they're talking about, and too many people are brainwashed. Frankly, I'll just leave it there on that point. China versus the U.S. is heating up. Dalio says geopolitical tensions are now a market force, not just background noise. 60% of global trade touches the South China Sea. Taiwan is the next flashpoint. Trade, semis, even AI dominance are now in play. This is a very good point, but I would add that, I mean, you look at America and Russia, or even more likely, the West versus Russia, and America versus Iran. Like, those are arguably even more. There's arguably even more tension between those than America and China. But definitely a good point there as well. His portfolio is radically different than 10 years ago. Dalio's focus on geographic diversification, hard assets like gold, neutrality in rising power conflicts. So he says, yeah, he's going away from America, but the vast majority of his investments clearly are still in America. So that's my position as well, is that I think America is losing their stranglehold on, world power, world dominance, for lack of a better way of putting it. But on the flip side, I also think that America is still easily the cleanest dirty shirt out there. I mean, you look at China, they have terrible demographics. Their government is centrally planned, which means centrally planned governments never do a good job because there's so many perverse incentives. You look at Japan, their demographics are very poor. You look at, I mean, where on earth is clearly better than America? You look at Europe. Europe is taxing and regulating themselves to death, and they have another obvious problem that they don't want to address that I won't get into because it should be obvious to people. America's dealing with it to some extent, but still not nearly to the extent that they should be. I think South America is intriguing to some degree, but they have, a tendency they'll vote for, a reasonable, sane government, and the crazy people, get in people's head, and eventually they end up right back with a communist dictatorship or some sort of dictatorship or horribly unstable government at the very least. So at the end of the day, America still is the cleanest dirty shirt. I think that when you look at around the world, I am certainly increasing my international diversification. In fact, frankly, I didn't have any. I do own some international companies. I mean, I have a decent sized position in ASML, in Mercado Libre. I mean, obviously, I own some Canadian stocks as well. There's probably one or two that I'm missing. I also have a very small position in Louis Vuitton, but nothing that's very large. The one thing that I've done recently is I am starting to dollar cost average into the Vanguard World Market Index. I believe it's IEFA is the ticker symbol. That's something I'm starting to buy. Historically, it underperforms the S&P, but I do think that it is a smart idea to diversify away from America, because I don't think that it's a good idea to be overly exposed, even if it means that you slightly underperform. Because let's just say a civil war does break out in America. Imagine, like, markets could be down 90%, right? So I do think that it's a good idea to diversify, even if it means a slightly worse returns. Now, within America, I don't think that it's necessarily a bad thing to be super concentrated. Like, if someone told me, hey, I'm really bullish on 5 stocks, do you think that it's a terrible idea to only own 5 stocks? I would never do it, but I would never tell someone you're a complete idiot for doing it. Now, again, if they were like horribly, like super risky stocks, no. Like, but if you said, hey, like 20% of my portfolio is in Apple, 10% is in Nvidia, those kind of things, I would never do it. I wouldn't recommend it, but I wouldn't call you crazy for doing it. So this is kind of an interesting post. Like I said, this is not something that I necessarily am predicting, but I do think that it's certainly possible, and it's something people certainly do need to consider. The one thing to point out too is that obviously this is something that people say like they lose sleep over, but something you need to point out is that if we have a modern day Great Depression or like World War III, you're not really going to care about your stock portfolio. So the solution is always to lean on the optimistic side. You always want to be more optimistic, because at the end of the day, if the world goes to hell in a handbasket, you're not going to care. If it doesn't go to hell in a handbasket, you're going to be stupid for selling or for sitting on cash. So that's the mentality that you really need. So anyway, that's what I wanted to bring up today. If you liked the video, like I said, please like, subscribe, check out those links below. Very much appreciate the support, and stay tuned for more.